Ladies and gentlemen, welcome back to another Bitcoin update. Now, I know people are probably sick of hearing about traditional markets. They're sick of hearing about this recession that's never come. And it's been, spoken about for months and months and months, almost years at this point, and it's just not really happening. We've been bottomed out on traditional markets for about a year, and we've been upwards around 120% on traditional markets from the COVID drop. I mean, we've gone upwards massively, we've been bottomed out for a long period of time, but unfortunately, there is a chance that it could actually start soon, and we're looking at yield curves for that reason. We're looking at DXY, we're looking at S&P 500, we're looking at correlations between Bitcoin and the S&P 500. There are a few things that could be a saving grace to Bitcoin. Perhaps Bitcoin doesn't get dragged down with those markets, but unfortunately, these markets don't look very good right now. And we have to look into Bitcoin and how Bitcoin's going to hold up in wake of what might be to come for the S&P 500. We're also going to look at the triple top on the S&P 500 adjusted for the money supply, again, tying that all into Bitcoin. So Bitcoin is facing a new threat now, because I say it's a new threat. I know it's been talked about a lot, but it hasn't actually been a threat in the past because Bitcoin's been very immune to the movements of the S&P in the past. As of right now, this is a new threat that Bitcoin is facing. Can it be overcome? Let's get into the video.
This is going to be a relatively quick one today because I'm discussing traditional markets for the first basically half of the video, and then I'll dive into Bitcoin. The reason I'm bringing up traditional markets, I don't usually do it, is because I think traditional markets are not looking good right now. Now, I want to start by saying this just straight off the bat, okay? Because a lot of people are going to bring it up. What is going on with traditional markets and Bitcoin correlations? Now, Bitcoin currently, now this is a chart from a month ago. Yes, it's a bit outdated, but it is kind of true as of right now. Although there has been a small uptick in correlations, it's mainly the same as what it is in this chart here. What does this chart represent? This chart represents the fact that Bitcoin is largely uncorrelated to the movements of traditional markets currently, meaning that traditional markets aren't necessarily moving in the same way that Bitcoin is moving. Bitcoin has a degree of independence right now, and so assuming this correlation remains, Bitcoin realistically shouldn't be going down when traditional markets go down. That's the problem though. That's assuming the correlation remains. Now, that's not certain at all. The correlation certainly could come back, okay? So this is kind of the premise of the whole video. If the correlation does come back, Bitcoin could be in trouble, because I'm going to be brutally honest with you guys. Traditional markets don't look good right now. They don't look good at all. Okay, so let's make this video assuming that the correlation does come back. Okay, and that's an assumption, but it's an assumption that I'm willing to make at this point in time because we need to understand the bear case for Bitcoin. So what is going on with traditional markets? Why are traditional markets not looking good right now? Well, obviously, the whole recession that everyone's been screaming for 3 bloody years at this point. It's been a long wait, and we've seen a massive disappointment on behalf of the bears. Obviously, we've been bottomed out now on traditional markets on S&P 500 since October last year. We've been bottomed out for close to a year now, okay? And we're up massively, okay? So we've been bottomed out for close to a year. We're up massively. We're up 32%. Right now, we're up to 26%. So realistically, everyone's been screaming for new lows for a long period of time, but we've been bottomed out for almost a year. In fact, we've been bottomed out for almost as long as we were going down for. So I think people did over-exaggerate a lot. Now, I'm not saying at all that we won't go down anymore, because I actually think we will. But I think saying we're going to go to new lows is hard. It's just hard to say. I mean, there's not enough data to suggest where exactly we will go. But I think the S&P 500 is in danger now. I think DXY is in danger of going upwards. I think that there are multiple things that realistically could bring Bitcoin downwards if that correlation does return. Why do I think the S&P is in trouble? Well, from a technical analysis perspective, it's very, very simple, okay? I mean, we went upwards way too much. Look at this pink market pattern right here. This is an ascending wedge formation. We moved upwards for a long period of time. We broke it to the upside. First of all, you're not meant to break ascending wedges to the upside, but we did do that. We then formed another ascending wedge, an even sharper ascending wedge. And again, we finally managed to break that to the downside after a very, very long period of time of consolidating within it. We're consolidating within that for 4 months, basically 3 or 4 months. We broke it to the downside now, and so now what we have is a break down below an ascending wedge formation. We're in a sharp downwards move because of that, and as of right now, we're forming some sort of top formation here. In fact, you could say it's something resembling a head and shoulders pattern. It is a little bit rough, but you could say it. Left shoulder over here, head over here, right shoulder over here. In that case, the neckline would be around 4,350. And if we break down from that, we'd be having a measured move target of around, let's go ahead and see, this green box over here, or this red line over here. Basically, we'd go down and retest this major level between like 4,000 and 4,200, which is a very, very critical dividing level, because that's actually the level on the S&P that we held for support back here in 2021. We held for support back here in 2022. When we finally lost it, we resistance support flipped off of it and went downwards further. So realistically, I would expect the S&P 500 to be retesting that green box at some point in the future. It's just about whether we see it now, whether we see one more move upwards before we see it. The reason why it's hard to say is because we've just seen so many consecutive moves upwards, out of exhaustion, that it's very hard to say where it goes next. The S&P 500 and traditional markets in general, right, are some of the most manipulated price charts you're going to ever see. TA barely works on them. I want you to know that. TA barely works on these charts. That's why I don't look at them much from a charting perspective, because it's not about TA with these charts. It's about so many other things that, whatever you draw in the chart doesn't actually really even matter. And so it matters to an extent, right? But I'm saying not to the same extent as something like Bitcoin. So you could make the argument that it's going to go downwards because of TA, but obviously TA is a weak argument when it comes to charts like this. But I want to make the argument in a better sense. So this is the regular S&P 500 chart. If we go to the weekly chart, we can see the S&P 500 has been a strong uptrend for a very long period of time, and that's largely because of money printing, right? It's largely because population increases. There's many reasons for that, and they're not really natural reasons, okay? There's no reason at all naturally why the S&P 500 has gained, 500, 600% in value since 2008. It's completely artificial, and you can say the same thing since COVID. All right, are you telling me since a global pandemic, right, that the S&P 500 has naturally gained 120% in price? No, it's ridiculous, okay? It's obviously artificial. It's because of money printing. It's because of various other reasons. So we've gone upwards. The point is we've gone upwards and made new highs for a long period of time. Now, what about if we adjust it for the money supply? All right, and this proves what I said. It's money printing. This is the S&P 500 adjusted for the money supply, all right? Now, for those of you who don't know what that means, it means if you take out printing, if you take out all the new dollars that have come into circulation and you adjust it for the money supply correctly, this is the true value of the S&P 500, okay? So, wow. I mean, basically the S&P 500 actually peaked here during the dot-com bubble in the 2000s, right? Early 2000s. And ever since then, it's been going down sideways, basically. We topped out again during the global financial crisis, and we're actually at the same level we were during the global financial crisis as we are now. We are also, okay, if we're zooming in even further, at a triple top. Okay, and it's actually a quadruple top. It's actually I don't know what the other word would be for the further one, 5 tops, but since 2001, look what we've done in the S&P 500 adjusted for money supply. Let's draw a rectangle, all right? Look at that. Look at that resistance on the S&P 500 adjusted for money supply. Now, if we do go downwards from here, because that is major resistance, and we're testing it for a third time, rejecting it for a third time here, a fifth time on a long-term scale, a third time on a medium-term scale, since COVID we rejected. In 2022 we rejected again now, right? If we reject again now, you can see, obviously, that we're going to be seeing a large correction, because you don't see 3 tops and then see nothing. That is the S&P 500 chart adjusted for money supply. I can't tell you how important how major that chart is. This chart shows us the S&P 500 adjusted for money supply has done nothing for 22 years. It is printing that has driven this thing to the upside, especially in the last 3 years during COVID. I mean, obviously, right? 2020 top over here, bang, same region as the 2021 top, same region as the recent top we just saw. If we go downwards further, what does that indicate? It indicates that we're going to be seeing massive amounts of blood on traditional markets in general, and potentially we could see that Bitcoin correlation return, and we can see Bitcoin see some blood as well. Now, we also have Benjamin Cohen's post here. Now, I don't have it on my own chart because there's no point. He's already outlined it pretty perfectly, and you've probably seen this post. Basically, he's showing us that yield curves, right? Yield curves, let's zoom in on the photo here. When they invert, okay, that's not when you see the downwards price action on traditional markets. You see the downwards price action on traditional markets after they uninvert, when they come back, okay, above zero. And we are moving towards zero, moving towards uninversion on the yield curve inversion, and that will be happening probably within the next, 5 or 6 months. That's when, or maybe even sooner than that, it really depends, 3-4 months, that's when, okay, we will see the downwards price action really start to occur in traditional markets. So we're put in a position now where we actually could be seeing a chance of the S&P 500 moving up once more, and perhaps testing this high again, perhaps even faking out above the high on the money supply adjusted S&P chart, perhaps even going upwards and faking out above it. But overall, if we're seeing history repeat itself, okay, which is actually a stretch to say we will, because history yeah, it repeats itself generally, but right now, I want to just make a quick sub point. We're not seeing a usual bear market on the S&P 500, okay? Well, I mean, it's not even a bear market right now. We're in an uptrend. We're technically in a bull market, okay? But I mean, overall, we're not seeing a usual kind of time period. What we're seeing is, the Federal Reserve aggressively raise interest rates while the S&P 500 is macro correcting. We've never seen that before. So S&P 500 is doing something, is seeing conditions. Traditional markets are seeing conditions they have never seen before in the entire history, in any recession. We've never ever seen the Federal Reserve raise interest rates while the markets are correcting. It doesn't happen. So it makes sense that we're seeing something abnormal in this massive pump. It does make sense. And it could further make sense that we see something more abnormal in that the S&P 500 actually doesn't go down. Perhaps it goes upwards, right? Because if we're seeing abnormal characteristics of this market environment, we're seeing abnormal conditions, we're seeing abnormal forces being applied, we can't really trust the previous trends. So it's not certain at all that the S&P 500 goes down to new lows. It's just not certain because we haven't seen the same characteristics that make up the trend that allows us to predict new lows. Do you understand what I mean? So realistically, the S&P 500 actually could be fine and the S&P 500 could keep going upwards. But assuming that the past trends remain, okay, we will go downwards. Okay, and then there is a reasonable chance that Bitcoin gets dragged down with it. So you can see why I'm concerned about traditional markets right now. We are in danger on traditional markets. Now, there's a few factors that could protect Bitcoin. Like I said, first and foremost, the market conditions are not the same as what they've been in the past. Therefore, we could see abnormal results, and therefore Bitcoin could not get dragged down, or even S&P 500 could not go down. And the second reason is that we don't have the correlation between Bitcoin and traditional markets right now currently, and there is a case to be made that they won't come back, and therefore Bitcoin would remain. So even though traditional markets are looking very bad, all right, there are a couple of glimmers of hope that perhaps Bitcoin won't go down because of them, or perhaps they won't even go down in themselves. But yes, I can't deny the fact that traditional markets don't look good right now, and I can't say it's bullish. I can't make the argument that it's bullish the way traditional markets look. I can make the case that it's neutral, and I can make the case that it's bearish. So overall, it is negative. And DXY is another thing, right? Bitcoin is reverse correlated to the DXY, or it has been historically. It's not at the moment. And essentially, if we're looking at that from a simple perspective, we can just look simply. When has this thing gone down? It's gone down during 2017, 2016. That's when Bitcoin was going upwards in a sharp bull market. Okay? When Bitcoin entered its bear market in 2018, 2019, that's when this thing was trending upwards. When it entered its bull market in 2020, 2021, this thing was trending downwards, okay? And during the entire bear market of last year, this thing was skyrocketing to the upside. And now, even if we're looking at even recently, when did Bitcoin bottom out? Bitcoin bottomed out in November. This thing started topping in October. It's been going down ever since during Bitcoin's uptrend. So this thing has been pretty good. The DXY has been pretty good in inversely predicting where Bitcoin is going. When this thing goes up, Bitcoin goes down. When this thing goes down, Bitcoin goes up, historically speaking. Now, this has broken above 3 major downtrending lines, and it is in a very strong uptrend, and there is reason to assume that uptrend will continue. And in that case, that's actually bad for Bitcoin. But again, as of right now, that correlation doesn't exist. But you can see what I'm pointing at here. I'm pointing to the fact that, traditional markets are looking weak. There's no argument around that. And if that correlation does return, Bitcoin could be looking weak as well. And that's when we start to get into, well, what does Bitcoin have to do in itself, right?
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got BingX, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on the good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
If Bitcoin is going to have these negative pressures applied to it from traditional markets, then we have to be holding some important levels. We can't just go down eternally, because if we go down too low, right, then we break 15K. If we break 15K down here, we break the 4-year cycle, then the entire macro structure of Bitcoin, is gone. So it's like, well, okay, if we are going to get dragged down on Bitcoin, which is not certain at all, but if we are going to get dragged down on Bitcoin, we can only get dragged down so much, okay? And this is where this pink major line comes into play, right? Because 24.5k, this green box really, and this red box and this line here is realistically the major level we need to hold on Bitcoin, 24.5k. It's dividing us between the two ranges. It's dividing us between the bear market range and the kind of bullish range. But, you know, it stands to reason that we will lose that level. You know, if we get dragged down by traditional markets, it's not very far below us. We could very well lose that level. Then we'll form a double top. So where's the next level of support below that? Well, the next level of support below that, realistically, is the pink line. And that's an uptrending line that we've held since, you know, 2018, 2017. We held it marked the bottom here in 2022 and marked the bottom during COVID. That's where we need to hold next. You know, and we've got a head and shoulders candlestick formation, market pattern, I should say, on Bitcoin, as you can see on the screen right now, that is targeting that pink line. So perhaps, you know, the S&P 500 and DXY and all that stuff looking not particularly good is another indication for us to believe Bitcoin will be retesting this pink line here. But I do believe that if Bitcoin was to follow the traditional markets, it would actually be seeing more downside price action than that. That could potentially threaten the structure of the 4-year cycle. So, you know, it's a pretty tough situation to be in for Bitcoin right now, because we've moved upwards quite a bit, but we've just come shy. You know, we've just come shy of breaking above the major level we needed to get above. We needed to get above 32k. All right, we needed to get above this yellow line here. If we got above 32k, we would have gotten back into the bullish playground, the bull market playground. We just kind of touched it, and we didn't quite get above it, unfortunately. And why do I say that's the bullish playground? Well, because if you look at that yellow line, where is it? It's the line that marked the bottom in all of the corrections of the bull market. It's the line that we, you know, retested for resistance before going downwards in the bear market. 32k is a safety blanket for Bitcoin, and we just missed it. We just didn't get above it, so we're back in kind of a danger zone for Bitcoin. And, you know, we really need to be holding 24.5. We need to be holding this pink line. Most importantly, from a macro perspective, on a very long-term scale, we need to be holding 15k. I mean, that's really the crucial level. 15k is what we need to hold. Now, luckily, we have a lot of room to go downwards. You know, 15k is a 38% drop downwards. And you might think, oh, it's only 38%. And I assure you, that's just your crypto brain talking. You're so used to seeing big moves downwards and upwards that you're so desensitized to it. But the fact of the matter is, 38% is a very, very long way down. That's almost half in valuation. That's almost every single, you know, every second Bitcoin being sold. So it's not a small amount. We do have a lot of leadway. We do have a lot of room for error. But overall, I'm not, you know, happy to see what's going on in traditional markets. And even though there are, you know, a couple of things that are securing us from traditional markets dragging down Bitcoin, such as correlation between Bitcoin and traditional markets, such as traditional markets acting in a way they've never acted before. You know, there are things that could save us from that regard. But, you know, regardless, it's not good to see the weakness that's been shown here. You know, obviously, S&P, the Bitcoin monthly returns, we're looking at the month of September. That's also another thing to be slightly concerned about. You know, September is a month that we've barely ever seen being green. We've only seen two green Septembers in the entire price history of Bitcoin. You know, out of 10 of them, we've seen two green Septembers. So 8 out of the 10 Septembers we've seen on Bitcoin's history have been red. And some of them have been very dramatically red. Now, luckily, on average, the red returns are like 7%, so it's not actually that major. People do overemphasize how major it is. It's not actually that big of a deal. But, you know, the fact of the matter is, if we're going to see a red September, which is likely, right? Where's Bitcoin going to go? You know, is it going to hold 24.5k? You know, is it just going to retest it and then go upwards? Is it going to drop it all together? You know, so big questions with Bitcoin. And, you know, we you know, guys, but I've been talking about monthly close as well. I think the monthly chart right now, let's go ahead and check it out. The monthly chart on Bitcoin is extremely important. You know, we need to be getting a strong monthly candle close, and not only for the monthly chart itself, but also for, you know, other monthly charts, such as, you know, stochastic RSI on the monthly. If we're looking at stochastic RSI, we can see it's just coming in for a bearish cross. In order to avoid that bearish cross, what do we need to do? We need to see a good monthly candle close. And right now, we're far away from seeing a good monthly candle close. You know, we've got 5 days to the monthly candle, and we're down here at 26k. We're meant to be up here at 29.2. So I don't want to give you guys the false impression that I'm super bearish on Bitcoin, because I'm actually not. I'm actually not super bearish on Bitcoin. I believe that Bitcoin's still in a good position. I believe that Bitcoin is still in a macro upwards trend. I don't believe we've seen a flip back to downwards trend yet. I mean, just simply looking at the charts, what are we seeing? Well, we're seeing still, okay, higher lows and higher highs. Bitcoin is technically in a macro upwards trend at this point in time. So I'm not bearish on Bitcoin. I also don't think that the macro is disproven to any degree, because the macro is based on the low. The macro is based on 15K. We're still well above 15K. I would say it confidently, I'm still macro bullish on Bitcoin. I am just aware that there are medium-term threats arising, such as the traditional markets, such as this head and shoulders candlestick formation. And if we lose something like 24.5K, that's when you can start giving way to some of these more bearish theories. But as of right now, I'm still macro bullish. I'm just, pointing out the fact that we do have some things to be a little bit concerned about. We do have some things to monitor. That monthly candle close, for example, is very important, and we'll be keeping an eye on that very closely over the next few days. So yeah, that's the video, guys. Thank you for watching. Check out the Crypto Academy. This will teach you everything you need to know about how to become a trader, hence the name Become a Trader 10-unit course. All the information is on the website. You can throw us an email. The email address is on the website as well. Email us any questions you have, any requests for payment information. We'll get back to you as soon as we can. And then secondly, we've also got the VIP group. Now on VIP, we have a 79% win rate. Okay, 79% win-loss ratio, which means 4 out of every 5 trades we succeed on in VIP. That's absolutely exceptional. You're not going to get much better than that. It is mathematically very, very, very difficult to achieve a win rate above 80%, and we're just on the edge of it. So we're doing very well in VIP. Trading altcoins, you want to make some money on altcoins, you want to make money trading, swing trading altcoins, you can do so in the VIP group. The information for the VIP group is linked in the information group, which includes all the payment information, includes what you will receive, includes the results, and also we'll be making some upgrades to the VIP group quite shortly, so keep an eye out for that. Guys, thank you for watching, hope you enjoyed, and I'll catch you in the next video. Cheers.